It's time for another stock review, this time Safety Shot, ticker symbol SHOT. A lot of excitement around the stock right now. We need to get into it. I've done a few brief introductory videos, but never a full technical, fundamental, financial, balance sheet, margin, inside trading, profit and loss, the whole works. Safety Shot. It's originally Jupiter Wellness, brand new company. A lot of new news around this. I'm going to cover some breaking news, why the stock is up, where I see it going, intrinsic value, balance sheet, inside trading, you name it. We're covering it all on this video. Now, if you are an investor on Safety Shot, I'd like your comments below in this video when it comes out. I'm making this during a live video, unedited, as it happens. If anyone in my live show now does a comment on a super chat, it'll put a comment on the screen and I can read it out and it'll be part of the video. This is a big stock now. A lot of people are talking about this. It's starting to trend. Even though it's a very, very small company. A lot of people are getting very excited about this. And when you get a small company like this, it can pop very, very quickly because it came from a very small place. Does that mean you should jump all in it? Well, we've never done a full review on it. We're doing it now, bearing in mind, though, that the information is going to be limited because there isn't that much information about it. It hasn't done very much yet. But the news is getting everybody excited, and we're going to find out whether you should be excited or not. During the next 15 or so minutes of this video, we're going to look at the website. We're going to look at the news. We're going to see what's covered there. We're also going to look at the full intrinsic value, the balance sheet, what the company represents, the efficiency, the fundamentals. I'm going to run it through the most advanced algorithmic software and give you a fundamental score, a solvency score, balance sheet, you name it. We're going to cover it all here on this video. So let's get straight into it. Safety Shot. Full disclosure, I am not in this stock at the moment. Even if I was, it would make no difference. Everything I give you here is the most honest, real information on my channel. I'm not here to promote or even sell videos for that matter. I'm here to build the most honest, real life TV show, YouTube TV show in the world. That is my aim. That is my aim, the most honest, most real TV show in the world, okay? I'm sharing with you the facts. No one pays me to say anything specifically about a stock. Even if they offered me money, I wouldn't take it. I just share the information so I'm known as the most honest guy on YouTube TV. That's why I'm here. That's what this channel is all about. So without further ado, let's get straight into it. We are going to start very, very basic and then get into the deeper details as we go. So if you want to see the fundamentals and the numbers, bear with me. We're going to start off light because we want to introduce the stock. It's brand new. Not a lot of people know about what it is right now. Please click subscribe and ring the bell. And if you like this video, it will share it out. If you do a comment under the video when it comes out, I will pin it to the top. If you do a super thanks, it will highlight it to the top as well. And you can... YouTube will push the video out if it starts getting, it's trending and so on and so forth. All right. Okay. So what is Safety Shot? Let's go straight into it on a basic level first of all, and then we'll go deeper. Right. If we just open up this very simple chart just for a moment, you can see what we've got here. Very, very interesting. It's IPO'd and went straight in at $4.78. So just understand, it IPO'd at nearly where it is now, okay? A little bit of excitement. It rallied all the way up to $5.45, which is where it is just about now at a high, and then fell away. Everybody got sort of gave up on it, and it went down to near nothing, went down to 30 cents a share. Remember, everything under $5 is a penny stock. Very vulnerable, very open for influence and pumping and dumping and shorting and all the rest of it. Remember, a stock that is held under $1 for a period of time has to reverse split, and it has all kinds of issues, and it can find itself off the index. So we have to be very, very careful. Now then, what is Safety Shot? Safety Shot engages in the business of developing cannabidiol CBD-based medicinal therapeutics and wellness products. It operates under the sales and development of CBD-based skincare and therapeutic products and sales and merchandise sold to theme park segments. Okay, that doesn't say too much. The big issue, what everyone's talking around about now, is the actual drink itself. There's a drink, which we're going to come on to in a minute, which you can take, and it basically gets rid of your alcohol content in your body. There is a concern, though. It does put a lot of sugar in your body, okay? So anyway, the CEO of this company is Brian S. John, 10 employees. This is a very small company, Jupiter in Florida, formerly known as Jupiter Wellness as well. Very, very small company. Literally 10 people. That's it. Founded in 2018. Very, very new company. If you are buying it on margin, if you think, hey, this is the greatest stock in the world, remember it's 75% maintenance. So it's regarded as very high risk, not as high as 100% risk, which you can get on margin, but not as low as 25% and 50%, which is more safe assets. Anyway, market cap 221 million now. It's rallying in on its market cap. Still loses money, of course, at 6 cents a share. Loses you money. So the ratio between what you pay for it and what it's going to earn is negative $6.03. So this is pre-profit, folks. You are buying a pre-profit company. That is, in other words, speculation. You hope that this is going to do well. You hope everyone's going to buy it, and you hope it can become profitable. Dividend yield. It doesn't provide a dividend yield at all. It's a growth stock. Average volume, 5 million. Today, 67 million. Everyone's gone bonkers for it. But just understand that it's still relatively low volume. Not for this company. It's not. They probably don't know how to handle it, but it's low overall. High today, 750. 52-week high is 750. We've got a 52-week high today. It's fallen back though. 52-week low, 24 cents. Extremely volatile. I'm surprised it's not 100 on the maintenance, but that gives you some indication that somebody likes it out there, because it should actually be higher than that. But there you go. Right, let's have a little look. As you can see, hasn't got any history at all, really. We are looking at the earnings here. I don't even know if we had analysis even review it, because we don't have analysis miss or beat on earnings. It doesn't look like it, because we just have solid green here, which means looks like no one gave it a review of what it was going to do. It's that small. Anyway, as you can see, it was losing money, lost more money, and then started to improve and fall away. So we can't learn that much from this. So far, we can't learn anything from this. Now let's look and see who's actually buying this stock. What sort of people will buy this stock? Gives you an idea. So now we have SRM Entertainment, Centro Electric. Don't know anything about that. SNDL. That's of course in the cannabis sector. Mullen. That's a bad sign. That tells you people are extremely aggressive, extremely shorting stocks, famous for it, potentially legally for it, if you want to believe what the CEO of Mullen says, Dave Mitchery. Tilray Brands, another very, very aggressive bunch of people, very heavy on Reddit, very heavy out there in social media. I don't know much about Organigram, just so you know. So it's going to be volatile. It's going to be backed by investors and gamblers, remember, that are very, very aggressive on this particular stock. So anyway, let's have a look. Let's go deeper into it. So first of all, let's go to their website. Let's have a closer look at the website. In a minute, we're going to touch the financials. We're investors here looking for an opportunity to invest in a winning company. Just try it. Trying Safety Shot is believing in Safety Shot. True innovation. Safety Shot is is pushing boundaries. It's also punishing you as well if you have a lot of sugar. But anyway, is pushing boundaries. Outstanding leadership team of domain experts, the right business strategy, multi-channel strategy. Safety Shot. Let me zoom in a little bit if I can. Make it clearer for you on the screen. There you go. Safety Shot is the first patented beverage on earth that helps you feel better, faster, by reducing blood alcohol content and boosting clarity. So think of it like a energy drink, if you like Red Bull, how well Red Bull did. It's kind of like that, makes you feel better and gets rid of your alcohol content. Something very unique, very different. It's patented, so no one's going to copy it. So it's going to be the only company that does it. I always like proprietary companies like that, as you know, so that's good. Let's also zoom in here, see what else we can find here. Safety Shot. This is the news that came out yesterday. Why the stock has gone berserk. Safety Shot set for first West Coast launch on December the 7th in California. Back in November the 8th, just a week or so ago, Safety Shot is the official title sponsor of Save Our Musicians Foundation. Special night with Luke Bryan. That's interesting. They should give me a phone call. I'm the world piano man. Anyway, back on October 30th, a little while ago, not that long ago though, Safety Shot's highly anticipated wellness beverage that reduces blood alcohol content, set to launch first week of December 2023 at drinksafetyshot.com and amazon.com. So it's going to be on Amazon as well. Looking quite interesting, right? A lot of news going on around the stock. Let me dive into the way the media are reporting the news as well. Let's get now, I know this is a little bit small, but please bear with me. I have to look this way because I'm reading it off another screen. So I know it's a bit small, but let me just read it to you. Safety Shot set for West Coast launch on December the 7th in California. Jupiter, Florida, November 2020, yesterday, Safety Shot today announced the West Coast launch of Safety Shot, the first patented beverage on earth. They like to make it sound big, right? There's nothing wrong with that. That helps people feel better, faster, by reducing blood alcohol content and boosting clarity. Created by industry experts and validated by research, Safety Shot is a nutraceutical, I hope I've pronounced that correctly, functional beverage that accelerates the body's breakdown of alcohol while aiding in recovery and rehydration. A recent study demonstrated that Safety Shot reduced blood alcohol content within 30 minutes. That's pretty extreme stuff, right? The average reduction in the percentage of BAC when Safety Shot was administered was 0.079% BAC in an hour compared to 0.01 BAC hour for the control group, which did not drink Safety Shot, with a statistical significant p-value of 0.02428. A larger double-blinded placebo-controlled trial has been initiated, and the company expects the results in December 2023. Okay, more results on the way. Members of the media, investors, and influencers are invited to the West Coast launch of Safety Shot at Bogies in Westlake. I know, in England that's a naughty word. In America it probably isn't. In Bogies in Westlake Village, California at 6 p.m., where they'll have the opportunity to test Safety Shot and meet management for Q&A. If you'd like to attend, please send your credentials to media at drinksafetyshot.com. I tell you what I'm going to do. I'm going to email them and introduce myself as Elton John's world piano man. If they like, musical entertainers involved, I'd like to interview somebody. So if you are watching right now, I would like to have a chat with you. Phone into my show. Our West Coast launch is the Los Angeles area is aligned with our national online direct-to-consumer summer sales launch through our own blah, blah, blah. Okay, we're going to just go on a bit of blah, blah, blah there. Let me scroll down. We've already read that. Okay, that's all good. Okay, nothing there we want to look at. I'm going to leave that there, and I'm going to email them and see what they have to say. Right, now we're going to look into the financials, because if we're going to invest in this, we have to know what the heck is the numbers. It's all very well announcing some great super drink, but really, we're looking at, as investors, to, be kind of like guided by the numbers. That's very important. Anyway, let's have a look now. What we've got here now is the revenue for Safety Shot. I do want to stress, however, the market cap today, because everyone's buying it, is gone crazy. It only earns 6 million. It's only got 6 million revenue. So it's a bit crazy, if I'm honest. We've got a market cap now. What do we announce the market cap? 228 million. Is it overbought? Well, I guess you could say that. I guess you could say it's overbought. But there you go. 228 million is the market cap with a revenue of 6 million. Work that out for yourself. So be very, very careful if you are buying it. Would you buy a can of Coke for $100? You probably wouldn't, right? Because it's overbought. However, stock can grow into its price. Everyone's very, very excited by it. It looks, looks great. But as investors, we've got to keep our heads on here. Otherwise, we're going to be joining a load of people buying at the top and thinking, oh my God, it's only actually a 20-cent stock. I mean, we want to really understand that, okay? Okay, so we just want to keep it balanced here. Operating income, negative 12.9 million. So it's losing money. We know that. Net income, negative 12.5. This is a really, really, really small public company. Don't know many public companies this small. This really is tiny. Operating cash flow, negative 4.8 million. And that's an increase of 7%. As you can see, operating cash flow is moving in the right direction, still negative. Capital expenditure, they're spending a bit of money around about here. This is June 29th, 2022, spending less now. Free cash flow, as you can see, negative 4.9 million. All right, let's look at the balance sheet. Right, very, very important stuff, right? You've got to look at the balance sheet of the company. The balance sheet of this company is 11 million in assets. Cash and short-term assets, 7.5 million. So it's got plenty of cash on the books with only 5.4 million in liabilities. So the solvency score, I would imagine, when I get to it, is going to be relatively good. But it's not just about how much money you've got in the bank. It's about what you do with it. I mean, as investors, if I give you my hard-earned money, I want to get a profit on my return, not just give you money to join a fan club. Anyway, 5.4 million. Accounts payable, 1.8. Accrued liabilities, 1.2. No debt. No debt, no short-term debt, no long-term debt. Let me just zoom out and show you the pie there. You can see we've got no short-term or long-term debt. Great, they're not in debt. That's good. All right, let's move on down and look at the efficiency of the company. This is very, very important. The efficiency of the company. Gross margin, 17% is what's projected because we've been losing money up to this point. I beg your pardon. No, that's not correct. And 21 and 20. Yeah, they had 19%. I beg your pardon. They have had some gross margin. I beg your pardon. 22, 23. Latest is June 29th, 23. 17% margins. Yes. Now then, that margin is very narrow. But you can't know how to compare this yet. Doesn't have anything to compare to. So we can't sort of say, is that good or bad at this stage? It looks low to me. If you are doing something innovative and new, you want a wide margin. That way, competition can't come in and crush you from the from the get-go. 17% looks low, but it's improved, okay? We were margins of negative minus 100%, but now we are actually we have a margin, a gross margin. Operating margins, negative 201%, but has been worse. That's really startup, though, I would have said. Negative net margin, 245%. Okay, so this is all pre-profit. The company doesn't make any money yet right now. Okay, let's have a look at it. I bet the profitability is low, and I would guess that the solvency would be pretty good. I'm guessing in somewhere the region of the late 40s to 50s. Let's scroll down and see what we reveal. Okay, here we go. So profitability, yes. Exceptional 3 years revenue growth, tick. ROE is increasing. ROIC is increasing. Positive 1 year revenue growth, amber. Profitability score 28. So no real profit here. We've seen it worse. We've seen it a lot better. Short-term short solvency score 51%. Basically, it's not going bust. We don't have a bright green, but we don't have red either. Anything over 40, 50 is quite good. All right, so low Altman Z score, but short-term solvency, long-term solvency, and low DE, all good. It's got no debt. Balance sheet looks good. Okay, so you're not going to go bust anytime soon, but are you going to get a return on your money? That's a very different question. Wall Street analysis. We've got no targets. Wall Street haven't analyzed the stock. No one even knows it exists right now. So we've got a very, very, very small company with a handful of people buying all the shares, pumping it up. You have to be careful. I have to warn you, this might not be a great investment. It might be, but bearing in mind, you are massively overpaying for where it is today. Now then, if you think that this is going to be the new Red Bull, but better, it gives you wings and clips your wings, actually, takes away your alcohol. So you're not flying around the room drunk with this one. You're going to be the very opposite. If you think it's as a brand like Red Bull, something really innovative, incredible, fantastic, yes, but it still has to have an intrinsic value. It still has to live up to its share price, right? And right now, its market cap is 10 times or thereabouts the size of its revenue. So it's extremely overbought right now, extremely overpriced right now. As you can see, we don't even have any Wall Street targets. Everyone's guessing, everyone's buying it. If you were in at 20 cents and you were up today 300 or 400% or whatever it might be, a few thousand% or whatever, you'd be thrilled to bits. No two ways about it. And you might say, sod it, I'm going to stay in. But to buy it today, I'm not going to buy this today. And I could be wrong tomorrow. It could be $20. But it doesn't really matter to me if it's at $20 tomorrow, because that doesn't make any sense, okay? That could go up and down as fast as it goes up. I'm not a gambler. I'm an investor. And, Wall Street haven't even looked at it. So, don't get carried away with yourself thinking, well, they haven't looked at it, so I'm going to be the first to buy it. The trouble is, there's so few shares available and everyone's buying them, so it's gone through the roof. All right, so we have to be fully clear of what's going on here. The competition, we can't really compare it to anything else, to be fair. And very limited history, nothing really to look at. We can see how it's exploded. Let's have a look here. And here is a worry. Put the brakes on just for a moment, folks. Just for a moment. 7.5% short interest straight out the gate. So those who understand how the stock market works have come straight in and go, hang on a minute, this is insane. This is ridiculous. I'm betting on this going down. This is too expensive now. It's got too big, too quick. This is crazy. People are taking out bets on it to drive it down. 7.5% short interest. Just so we know though, short interest doesn't get, excessive until it goes past 20%. We're not in any time soon having a short squeeze. There's no shorters getting played out, closing out their contracts and having to buy in and it piling up like GameStop or anything like that. That's not going to happen. We have to be way up through 20%, heading towards 100. 100% is where GameStop squeezed. So let's get straight. However, However, this doesn't present us with the opportunity of a short squeeze, which is great. What this can do is just drive the stock down. That's not what you want, okay? If you are an investor, and the reason for that is this is high, but it's not high enough to be a short squeeze situation, okay? We are at the lower range, but this is still high, because if you look at things like Apple, they're less than 1%. So no one thinks Apple's going to crash, okay? Whereas 7.5% is quite a lot. It's high, but not excessive. So there's no good short squeeze coming down the pipe, but there certainly is the potential for the stock going down because there's a short interest put on it, all right? So be very careful. So far, this isn't right for me at all. I've got to be honest with you. I'd love to say it is, because there's some lovely people that I know follow this stock, but right now it's extremely overbought, extremely volatile, and I would invite any of those at the company to call me for an interview and tell me what your thoughts are about your company and where you're taking it. Anyway, I can't do a back test against the S&P. There's just not enough history there yet. We've got no real intrinsic value. We've got no real understanding of the stock at all. 6 million revenue. I mean, I don't make 6 million, but you know what I mean? It's not a lot for a publicly traded company. I think it's got, what did we say? 10 employees or whatever it was. So this is very, very overbought. Anyway, let's read some of the comments that are coming in. Robbie Cooper, it's way overvalued. Yeah, it's way overvalued. Robbie says, whoopee, they are listing on Amazon in a saturated sector. Market cap of 200 million is laughable, said Robbie Cooper. It is. And remember, I've got products on Amazon. I've got a CD on Amazon. I've got stuff on Amazon. I've got souvenirs you can buy from my shop on Amazon. It's no big deal to be on Amazon. Just, anyone can be on Amazon. It's nice, but it doesn't, it doesn't tell you anything really. Robbie Cooper says, shot looks like a scam to me. It's another meme stock which will crash. Well, I'm not saying it's a scam. I don't like using that word scam at all. It could very well be that the company itself are buying the stock. It could well be pumping it up, but there is no evidence to see any media really getting behind this company. There is no news. There's nothing here. If it was some kind of scam stock, there would be some news here and I could report. There isn't. There isn't any news here, so there isn't anybody really behind it, pumping it. So I don't like using that word. I don't think it's relevant here. This could be something great. Is it overvalued now? Absolutely, it's overvalued. No question about it. Anyway, that is as much as we're going to be able to do with Safety Shot as far as a review is concerned. There just isn't any more information. I am going to email and reach out to the company. If you are watching this video, please do contact me, DM me, email me, martyn@martynlucas.com, or DM me at any of my social platforms. I'd love to interview you, have you on the show and discuss it. But Safety Shot, there's my review of Safety Shot. Click above my head for all the links. Look below in the description for more links. My social media, my newsletter, and my other reviews will be posted over here. More Safety Shot information. I'll have a whole playlist coming out to follow what's going on here. But it's very, very interesting. I'm really excited to follow it and see what it does. But let's see. Let's keep an open mind. Until then, as always, take care of yourselves and each other.